right here, we've got the 100% retracement move. That's at $57. Then we've got the 1618. This is a really powerful level around 85. So the next one up here would be the 200% move. That's around 102. The 2618 is 131. This is kind of interesting because I've heard that this is kind of around where solar panels start to be possibly substituted with something else, so I don't know if there's anything to that. We'll see. 300% retracement move is going to be around 150, 148. 3618, 176, 4618, 222. If we go back to the last year's performance of silver here, and I hover over this last bar, we can see that silver made 141%. I'm just looking at the green number up there. So the metal itself made 141%. And if I go here to SIL, okay, a popular silver miners ETF, that one made 162%. So you're absolutely right. They did outperform, silver, but not by the exponential factor that we're used to seeing in past bull markets.
Silver's recent price action highlights the growing importance of Fibonacci retracement levels in technical analysis. Key zones like the 100% move near $57, the powerful 1.618 level around $85, and higher extensions at $102, $131, and $150. Serious attention from traders. According to market analyst Steve Barton, these levels often act as psychological and structural inflection points during precious metals bull cycles. Interestingly, last year silver gained 141%. Returned 162%, outperforming the metal, but not exponentially, as seen in prior bull markets. This divergence may signal a more selective, fundamentals-driven rally ahead. Now, we present the clips from Steve Barton's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
It's not a coincidence that traders traded up to this level and then sold and then came up, and there's a lot of price action around each of these Fibonacci retracement levels, right? So if we go into some of the more recent action, I think the last time we were talking was somewhere around there. And if I go now to the daily, we can see the price action a little bit better. Each bar is a day now. It just seems to be acting around these levels. And so the last one we had right here was just the low 80s. The next one that I see up here is going to be just north of $100. So this one has it at 102. Another way you could do it, and that I think that a lot of traders are going to actually do this one instead, is they're basically going to take the long-term view of the chart, and you see how we kind of have this cupish pattern right here. If we take the high right here from 1980, touch it over here to the high in 2011, and then string it back over here to the high this year, we can see that if we take the price from here up to here, flip it on itself, okay, that number comes out to 88. Okay, we've blown through that, so we can let that one go. And then we take this next one, this big part of the cup, we take basically here from $4 and run it up to 50, flip it on itself and add it, and you get a number of 96. So I think that a lot of traders are going to be taking some profits. I could see us doing kind of sideways action, maybe a bull flag around that 96, maybe around the $100, psychological even number level, right? You get a double from 50. I think there'll be a lot of selling around $100. I do expect it to go beyond that. This is really exciting, but yeah, I have been trimming. I have been selling some physical silver, and I've been putting it into oil and oil stocks, and I've been putting it into gold and silver miners because they have not played that catch-up trade, right? A lot of analysts are still using silver prices down here, sub 50, to do their calculations for the next quarter. So this is such a tiny market. This is our whole world, but this is just a blip on the screen of a lot of Wall Street guys, right? So when they see that this is up here and it's still up there and it's still climbing, I think they're going to have to redo their calculations for gold and silver miners. And I think we got a real catch up here coming in the next quarter. I have call options on some junior silver miners. I'm very excited for this next quarter. But, we have to take this into perspective here. It wasn't that long ago that we were at $35 an ounce, and now we're at 92. That's an Icarus print. You got to pay yourself. You know what I mean? Just like when oil went from negative $30 a barrel and 2 years later it was up at 120. you got to pay yourself. You got to take some profits off the table. And I really like selling some physical here. And I don't mean going down to your coin shop. What I'm talking about is selling like this one, like PSLV, physical silver on the stock market, PHYS, physical gold on the stock market. So you can see I got my next sell order up there. Like I'm expecting it to go higher. But yeah, I really believe we should be taking profits here, rotating it into, possibly coal, oil, and some of these, select gold and silver miners. Right here, we've got the 100% retracement move. That's at $57. Then we've got the 1618. This is a really powerful level around 85. So the next one up here would be the 200% move. That's around 102. The 2618 is 131. This is kind of interesting because I've heard that this is kind of around where solar panels start to be possibly substituted with something else, so I don't know if there's anything to that. We'll see. 300% retracement move is going to be around 150, 148. 3618, 176, 4618, 222. All right. Now that's crazy town, but who knows? I mean, we are kind of in a new paradigm here. This is a basing pattern. This chart goes back to 1970, right? When they still had gold fixed at $35 an ounce. We just had a massive move up. This is a basing pattern that took 45 years and we have now finally broken out of it. I mean, every trader on the planet has this white line on his chart that I've just drawn you here. And this is the floor in my mind. Like I just can't envision where silver is going to get back down here, to $54 an ounce, in this bull cycle. Like I just don't think that's going to happen. It could get crazy.
Silver's breakout is reinforcing the importance of long-term Fibonacci retracement levels and historic chart patterns. Recent price action shows consistent trading, selling, and consolidation around key levels like $85, $96, and the psychologically critical $100 zone. Technical analysis suggests traders may take profits near these areas before a potential continuation higher. With silver surging from $35 to over $90 in a short time, disciplined profit-taking and sector rotation are becoming common strategies. Many investors are reallocating into oil, coal, and undervalued gold and silver miners, anticipating a catch-up trade as Wall Street recalculates earnings assumptions. After a 45-year base, silver's bull cycle may still be in its early stages. Let's get back to the interview.
If we go back to the last year's performance of silver here, and I hover over this last bar, we can see that silver made 141%. I'm just looking at the green number up there. So the metal itself made 141%. And if I go here to SIL, okay, a popular silver miners ETF, that one made 162%. So you're absolutely right. They did outperform silver, but not by the exponential factor that we're used to seeing in past bull markets. So that's one of the reasons as well that I'm really excited for this catch up here, because I think that the generalist person is starting to come into the market. I think a lot of this is driven, by speculation by investors. I don't know that there's really a shortage going on. I think the shortage is coming because people are buying it more than anything else. But yeah, I fully expect a catch-up trade like this. I think that it's coming, and I think it's going to come this year and probably this first quarter. We had a cup handle breakout retest. There was actually 3 points that you could have bought this. You could have bought it right here. You could have bought it on the breakout. You could have bought it on the retest right there. I think we still got a little bit of room to run, like I was talking about. We got the earnings calls coming up for a lot of these silver companies. And I think you're going to have one last little punch right here, before that happens. Assuming the silver price can stay above, $75 an ounce or so, that should blow out expectations. And, I think it'll be a really nice trade. I really do. Yeah. There is another one that I'd like to bring up too. And it's pretty pivotal today. This is, gold divided by the S&P 500. So this just kind of, goes to show our point here is, the metals are still undervalued compared to the S&P 500. And so we finally just broke out of this cerveza sickness top right here. So this ratio, this is basically taking gold and dividing it by the S&P 500. So when we see this 0.7 over here, that ratio, when this gets up here to 1-to-1, that basically means that you can trade 1 ounce of gold for 1 share of the S&P 500, right? Okay, we're not quite there yet, but we just broke this pivotal resistance like today. And there's very little resistance in the way on above that. We've also got a neat little pattern, like I was just showing on the other one, kind of a cupish pattern with a little handle right here. So it's not perfect. It's a little bit more of a V, but it did hit perfectly down here on the 38% retracement, 38.2% retracement. So the way we can measure this immediate target right here on this ratio chart is we just take the bottom up to the top and then string it back up. And look at how much more we have to go, Charlotte. This next upside target here will be like 0.75, 0.76. And then if we do a logarithmic target on that, so we basically take the percentage move. So remember the percentage there is 16%, and you string it up. And it could even go a little bit higher. If we bring that up to 16%, boom, could be up to like 0.77. Okay, so still more room to run here. I think generalist money is starting to realize, what we've known for a while, that since November of 2024, gold has been outperforming the S&P 500. And with it clearing this little bit of resistance here, I think institutional money will start to pay attention to that as well and move in even more.
Silver and precious metals markets may be entering a pivotal catch-up phase as performance gaps narrow. Last year, silver rose 141%, while the Silver Miners ETF gained 162%, outperforming the metal, but not with the explosive leverage seen in past bull markets. This underperformance is fueling expectations of a powerful miners catch-up trade, especially as generalist investors enter the space. Technical signals like cup and handle breakouts, strong retests, and upcoming earnings calls point to further upside if silver holds above key levels. Meanwhile, the gold to S&P 500 ratio has broken major resistance, signaling metals remain undervalued versus equities and attracting growing institutional interest. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.